right. So getting into the morning, I want to talk about this specifically because I know a couple people had more so kind of were leaning a little bit more bullish than anything this morning. And I kind of want to explain basically the thought process behind it. And today was one of those days where it doesn't, I talked about this morning in the AM Live, where it's one of those days that doesn't happen all the time, but when it does, specifically with the 72 minute, the bias will never be more clear than this, realistically, right? So immediately getting into the morning, kind of taking a step back, analyzing what we talked about yesterday, what we saw, right? We saw that -2, -2.5 tap, got a retracement, started to displace down, and an overnight session, we saw price, or this was actually, yeah, this was Wednesday. I'm getting my days mixed up. Yeah, this was right before midnight. Overnight session, Asian session, whatever. We came down, we tapped this -4 right here at 18,663. And you can see we just traded a little bit through that, closed bodies completely above it. And knowing the function of the -4 is we always usually probably 8-7 times out of 10, we get some form of quality retracement off of it, usually to 50% of the range, which if we get a marker out specifically for this, which I'll drag it to, it's this low up to this high, which stem from the move. So this basically up here is going to be the move origin of this whole entire area, right? We can mark out the 50% of this range, right? And automatically, similar to how we identify like lower time frame points inside of higher time frame points, that's just going to be like, where's the 50% of X, right? And we identify an area or like a POI, several POIs possibly, near that specific area. So we see this white line right here. So we automatically know the 50% of this range is right here. And I talked about this. I remember talking about it in the morning session. Was we had this big imbalance right here. We had this big 72-minute swing right here. And then we were starting to creep up right up to this 72-minute high. And I actually there was a long before it that was basically gravitating towards up to that, but I'll get it back, or I'll get into that here in a moment. But what happens right here that is extremely, extremely significant, and why it's easy to frame a bias specifically off this type of function that happens, is what do we see right up here? Similar to what we talk about all the time on the 1 minute, same thing for like entries. The 12-minute fail to closes, the 1 minute fail to closes, right? We see it happen on the 72-minute. And given it is the 72-minute time frame, this is going to be much, much, much more prominent than say like the 12-minute, the 1 minute. Those are going to be good for intraday more so moves rather than an actual physical bias to frame a complete direction off of realistically for almost the whole entire day, right? So we see price trade up above this high right up here that is resting within this imbalance, right? We see it get one final push up, tapping into what? A big 72-minute CSS right here. You can see this green bar, this black bar puts in the high right up here. We come up, we tap that. So we take this high, we tap that imbalance, we tap that CSS, we close back within the range. So immediately once this happens, what can we already start to anticipate to happen, right? We can anticipate and understand that these should be weak lows, right? And it's also important, especially on the 72-minute time frames, to be or to frame some sort of low-hanging fruit targets, and those could just be internal lows, similar to how we form targets on, say, like the 1 minute charts. We don't always go for that extreme low, but we're anticipating price to gravitate towards that, right? And if we zoom out a little bit, and I remember talking about this too, was this unmitigated wick right here. If we draw the 50% out from this, what do we see price fail to do right over here, right? Price trades near it, does not mitigate it fully. A full mitigation for me is at a minimum of 50% tap, right? We failed to do that right here. Let me zoom in a little bit more. You can see is also I'm on the left side of my chart, by the way. I don't want y'all getting confused or anything, but we fail to touch that 50%, price trades away from it, right? Think of this in the same thought process as engineering some form of liquidity, right? Because understanding wicks, right? We know on some time frame right here, this is going to be structured on the 12 minute, the 1 minute, whatever, right? And we know that price, it looks like a wick on the 72, but there's going to be something that this is going to want to refer to down there. So it's important to kind of recognize what happens in wicks, similar to like what I've talked about before in one of the examples yesterday, where it was a purely 1 minute wick and price traded up to the like extremity of the wick. And I was like, oh, I know this is going to be a 10-second CSS or some sort of high imbalance or whatever down or up within, right? And that's the same concept within this, right? These 50% of these wicks, that's the exact same thing, right? But the most important factor is what price does near this, trading away, failing to close, right? We have this beautiful low resting right here. We have the 50% of this wick right here, and we also have this prominent low right down here at 18,621, right? So immediately when that specific function happens on the 72-minute, we can already anticipate lower prices, even though this -4 standard deviation has been met, because a lot of times, usually at the -4, if the intended price run is complete, we will kind of pivot from there and start to refer back and maybe start forming some more bullish structure right here, right? So with that being said, I'm going to hop back over to this chart. That's an eyeful right there. That's a lot of drawings. But I want to talk about pre-market real quick, because there was actually a couple good setups. There was one right before news, the one I took, and then there was one literally minutes before news that would have actually been super, super quality. Let's see. So we're right here, right? So let me drag this over so you can actually see this. What we see here is price comes down, takes this 12-minute low. We fail to close below it, just like we just talked about on the 72-minute, right? We confirm, we trade up right about here. This is confirmed, right? We see price come back, sweeps this low, but specifically where within 1 minute structure is this, right? We see a CSS right here, right? Confirmed right there. But we also see intertwined on inner structure, we see this CSS right here. So this is going to be like a layered CSS. This is always going to give I wouldn't say always, but very, very high likely this is always going to be some sort of strong confluence to see within a specific signature where you're getting an entry, right? We got that higher time frame confluence. We got these lower time frame structure aligning with us, right? We see this little break right here. We liquidate this low, close back within range, and then where you take an entry off of the break of this candle. Now, usually, and like why CSS candle projections are so important is exactly this right here. Now, you could be, and there's two possible scenarios of why we are anticipating this high to be met, right? Obviously, there's more than two. We got news, right? We can understand, and I've talked about this multiple times right here. What do we see? There is one singular high. There is not really anything up on the extremity of this range for price to really refer to other than that. There is no relative equal highs over on the left side of the chart, right? There's no high up here with paired a little bit higher than this high, right? So automatically seeing that and noting that specific function that happens at price, that automatically dictates that we should be going for internal points to close the trade, right? So we have that in mind. We have news in mind. But we also, if you're wanting to keep it as simple and as less hectic as possible, as easy on the mind, right? What you can simply do is just get a really nice CSS projection, right? Once this is confirmed by this body closure, keep in mind, I'm already in the trade right here. But when I see this confirm after, immediately get some CSS projections right off this, right? So that's going to be this low to this high of this down bar right here. That is the total CSS sequence right there. And we see price come up to the -1, -1.5, retraces a little bit back down to here, okay? Right there. This is just coming back within all of this little micro consolidation right here, ultimately expanding to where? That -2, -2.5, which is where it stalls out right up here. This is why CSS projections are extremely, extremely powerful in terms of targets. And more times than not, you're better off usually just going for that to our target, unless it's just a super, super clear point for price to draw, which would be some form of really near equal highs, relative equal highs right up here, right? So this one right after would have been just as clean. And I think Stoic took this and he said that he completely forgot about news, which I kind of thought was funny. But in regards to a setup, this is just as good, right? We see price now doing what? Now we have some more structure formed right up here. Price puts in what? Relative equal highs. So now we have something more to base a full-on target from, right? We see price refer back to this area after doing what? Retracing from that -2, -2.5 CSS projection right up here, which is a retracement prone area. It refers back over here off of this low, what does it do? Closes there. And you can either, there's kind of two entry functions here. But specifically, actually, before I talk about that, price refers back to where, right? Sweeps this low, and where is it immediately coming back to? Right over here, move origin, this layered CSS, right? So you could either be taking it off of, and I would say ignore what I'm about to say. Honestly, I'm not even going to say it. I'm going to save that for later. But you could be taking your entry off of this, right? But keep in mind, we also had news in literally like 3 minutes, and that's not something that would be logical to play, right? So now getting into AM session, we had open right about here. And this is honestly just a really good example in terms of if we were completely obsolete and not even thinking about time, right? We were completely disregarding open. This would be I think, in my opinion, a really, really quality example, because what we see here on the 12-minute chart over on my left side is a beautiful CSS, right? We see this up here, trades below it, closes below it over here. Okay. Once that's confirmed, what do we see happen? Price engineers some lows. Right over here, we have this low, we have this low. Now we have something to base something off of, right? We have something, actual physical structure to target with high confidence. Like I've said multiple times, these relative equal lows, relative equal highs will always, more cases than not, be in 9 out of the 10 setups that I take, because they're always going to be extremely high probability, right? So we see price kind of almost get a smaller range expansion back up towards this. What do we kind of refer back to up here? This move origin area. Price induces this high right here, closes back within range, and then expands down. Where does it immediately target right before open? Right there, right? And that's just something that, like, in terms of an example, that would be quality, but obviously you should not be trading that close to open. It is absolutely, in my opinion, really dumb. That is semi-gambling. Just because we know sporadic moves at open are highly likely. It's a manipulation more so than anything, right? Now, in terms of the first actual setup that I did like, of the probably 2 throughout the whole entire day, what we saw here, and this would have been a really quality setup, was we saw this deep expansion right here, giving us a nice flip on the 12-minute, right? We closed below this low over here that put in this high. It could be either or. Both you can kind of frame it off of. Both are correct. But what we saw, deep expansion, price started to come back up here, right? We had 9 a.m. news, which is important to remember, because 9 a.m. news, especially being a red folder, I will usually always wait for that to post, because what happens more times than not is we will get some form of consolidation right after open leading into that news driver. And that usually, I'm telling you, that happens more times than not. And you'd save yourself a big headache not even worrying about anything within here and just waiting for that to post. Because, I mean, realistically, is it worth wasting a decent amount of mental capital trying to find something in this basically first 30 minutes when you know you can have the whole entire day after all news events have cleared? No, it's not. It's better to be smart here, right? So what we see happen, right, we consolidate a little bit more, and we get this really obvious high, right, which is also resting within this layered 12-minute CSS right here. You can see this green bar right here, this black bar puts in this high. This confirms this CSS. You can see price refers to it, and this is where we kind of start to chop right before news. What I wanted to see here, just specifically because this chop, right, was the extremity of the range met right up here, which honestly, this is just an extremely obvious high, and it jumps out to me more so than anything intertwined, right? And it's always going to be, in my opinion, if what I want to see price gravitate to doesn't get met, I will not take the trade, because to me, that is forcing the trade. And I'm not going to go out of my way to engage with something that was not predetermined before it happened. And I really want to make that clear, because that is a very important aspect of the way I trade specifically. I will never force a setup that I didn't think about that could have happened before it did. That is arguably one of the most important factors that allows me to be able to see it the way I see it, if that makes sense, right? And I really wanted to see this high happen. And the problem was we actually got some, I believe, some decent SMT against ES right here, which is basically where just ES makes a higher high and NQ makes a lower low, or vice versa, given whatever you're kind of countering in between, right? But that's specifically what happens here. If this would have taken this high, this would have been one of the most beautiful setups, because what do we have again in vicinity as a target? nice relative equal lows right here as internal structural target. And we have almost dead equal lows right down here, right? And it's important to zoom out here too, because off of these standard deviation projections, off of, I need to go back and talk about this, but there was I believe, let me go back to it real quick, where you're wondering these CSS projections are off of this 72-minute CSS up here, which I can jump over. I'm not trying to jump back and forth between stuff, but I want to show this because it's semi-important, right? That high, that low, that's our 72-minute CSS, right? So hopping back over to this chart, right over here, it's important to kind of zoom out and kind of see what price should do and where it kind of wants to gravitate towards, right? We have this -1, -1.5 resting below there, which is always going to be a great point for price to draw to because it's a deviation away from the initial manipulation that the market saw, right? So knowing that we have that -1, -1.5 area down there, we even have I believe it was a 12-minute fractal resting right over here, basically smack dab. Ooh, that's actually kind of interesting. That just piqued in my mind right there. This fractal, the 50% of that is almost identical to the 50% of that fractal. But besides the point, right, we have areas where price should gravitate towards, right? We have relative equal lows, almost dead equal lows, the -1, -1.5, a nice fractal, and we just had that bigger flip up here. So this honestly would have been probably one of the best setups I have seen in quite some time if it actually went up and took that high, but unfortunately it didn't, because you can see this price run that it gave down to these lows, and you can see where it bottomed out before giving a nice retracement back up was almost exactly at the 50% of that 12-minute fractal from the left side, right? So next setup, honestly, I want to talk about this too, because I actually don't even have marked it up, but I just remembered right here, this one right here, there's a specific reason I don't like this, right? What we see right here, what does this look like? At least in my eyes, what is this purely? To me, this is still basically what happened is tight range, then we just formed a bigger range right within here, right? Just the way this immediately returned back into the range is not something I really wanted to see. I would have more so like to see either some continuation displacement out of it. Obviously, retracements are likely, but it's kind of important to recognize scenarios like this, because to me, I wouldn't even give this maybe a B setup. I'm not sure, honestly. It's just not something I really, really like at all, because if we mark out the 50% of this total range right here, this is going to be resting right within the 50%. And a lot of times that is where some nasty chop will happen, and you can get caught up in setups that are just, if you recognized it, you could save yourself a lot, because a lot of times these will get several inducement points, and you're going to get knocked out several times before it really moves in your intended direction. And that's specifically why I did not like that. Now, in the case that it went up and took this high, and maybe say it gets a manipulation like a wick tapping up into this CSS right here, this could have been a different story. Now, but the main important thing to note was it didn't. But in terms of why I would have liked to see that more so is because that's more in a premium of this range, right? We can understand that, especially in ranges, it's important to be shorting where you need to be buying low and selling high. That is one of the most important things in range trading, which I'm going to kind of show a couple examples of a really nasty tight range that we had in PM. But in regards to this setup, this was the next setup that I liked. Now, there was one specific thing that I didn't like about this, and I've talked about this multiple times in previous reviews, was the size, like the range of the candle, right? If we measure this right here, 17 points. If you looked at the PDF that I shared with everybody, that slideshow thing, my max risk that I usually like to play is 10 points. I usually don't want anything beyond that, because I don't want to ever have to bump down to micros. I don't want to bother trading micros, because the commissions and just the wonkiness that happens on micro charts, it's not fun to deal with, right? So knowing that and understanding that is, I really don't want to be putting myself in a position where I can get stopped out in this trade without even being wrong, right? And the meaning behind that is I technically should not be invalidated until this high is taken right up here, right? And the problem with having a 10-point stop is it was resting, I believe, right at or near the 50%. Yeah, 50% of this wick. You can see how close price comes up to this. And the reason this is more prominent than anything, because I'll say this too, because I know I've talked about this also, and I'll try and say this slower because it kind of contradicts what I just said. But say for an example that this candle right here had a much larger body, right? And it didn't have this just big, nasty wick. I would have been more okay with this because when there is a bigger body, the likelihood of a deeper retracement is much lower than there being a massive long tail wick. A lot of times these wicks will get some form of deep mitigation. And then I remember talking about that in this live was price could easily come up to that 50% of that wick, which it came near. That was 2 ticks off. And that could have been a point where you could have been stopped out depending on your risk profile. And you wouldn't even been invalidated in the trade. And this is a perfect example of what I mean by this, because came a couple ticks away from where your stop would have been if you were playing with 10. But look what it did not come anywhere near, where the true point of invalidation would have been, right up there. And you can see obviously that this started to turn back over and start to gravitate towards these lows right here, right? So I think we are now getting into lunch, which we did have a really nasty tight range. Actually, let me see if there's any AP, any way you can add the 0 and 1 to the fib level to be able to see the anchors. Yeah, let me go back to that real quick before we hop into lunch. Let me go over to the M&Q chart. I usually just do that. I take them away because it clouds the charts. But what I'll do this real quick so I don't have to edit my settings. This is the top anchor right up here. This is the bottom anchor right here. It's just the CSS. That green bar. You should know the color sequence for CSSs since you've been in here for some time. But if not, that is okay. That is okay. So hopping back over to the NQM. But future reference for like lives, I'll do that though. Moolah, for sure. Hopping into lunch right here. You can see we get this pretty nasty range, right? And Brendan, I apologize for this too. This one, I was at the gym and I wasn't even really paying attention to it. I just quickly peeked at it, but I'll talk about that. And this definitely would not have been, it was an okay setup, but it definitely would have probably even spooked me out of it. But I'll get into that. And right here, you can see this little annotation right here. Range bound, sell high, buy low, or wait, yeah, sell high, buy low. I thought I just completely mixed that up. But this shows the extreme importance right here. Now, none of these are, besides a couple down here. Actually, let me talk about the valid ones first, right? Right here, if I zoom in, golly, I feel like, is there too much stuff on my chart on the left side? Be completely honest. Actually, what I'll just do is I'll start deleting some of this stuff over here. I don't want it to confuse you all, so you can actually see my chart. There we go. There we go. That's better. That's what I figured. It looks like. Oh, that's funny. I figured. Yeah, Rico, I got you in a second. Let me finish up with this stuff, and then we'll go over that for sure. But in terms of this right here, really the only valid one within here to me would have been, you can see we have this CSS right here. Boom, boom. We close above. Oop, we close above it right over here. And you can see this is where all this nasty range happens. But in terms of setup, we have that CSS confirmed. Price returns back right over here. We see some nice equal lows right here that are actual physical swing low. Price trades over here right before it, induces this little short short-term low right here, ultimately coming down and taking out there. And FTC basically just stands for fail to close, so you aren't confused. I changed it from X to FTC because it just looked better. The X was getting annoying. But what we see, inducement right here, come down, take these equal lows, and then you could be taking a break on this, right? And immediately again, and this repeats every single time, and I hope you see it. I'm just going to say targets and why you shouldn't be targeting for the high. What do we see right here? As opposed to what we want to see, right? We don't see any relative equal highs from a left side to a right side point of view, right? We see, quote unquote, high resistance right here. So logically, we should be targeting some form of internal highs or an extreme CSS. Now, this isn't color coded, But if you're wanting to go for a more extreme part, you could be going up here, which is where price tops out, right up here. Because on a lower time frame, this is going to be some sort of move origin up here, just given the size of this CSS right here. Or you could even, if you wanted to go true on the CSS, it would be right here at the 50% of this, somewhere within, right? Or that internal high specifically. Now, this right here is more so just the importance of range bound conditions, right? You can see just tight range, up, down, up, down, up, down, up, down. And this is a perfect representation of sell high, buy low, right? And a lot of times, now I'll be brutally honest before I get into this. I am not the best range bound trader, even remotely. It's something I am working on for personal development. I've gotten a lot better at it. I can spot it 10 times better, but I still get a little hesitant when we get in conditions like this. It's just not favorable in my opinion. It's best to kind of just let it play out and wait for a proper trend to form, right? But in terms of range bound conditions, and if you're wanting to trade them for quick scalps, you need to absolutely focus on identifying the range bound stuff first, identifying the extremity points of the range, and make sure you are only engaging in shorts in a premium part and only engaging in longs in a discount part. And now obviously that's easier said than done, but once you see it several times, this is going to become almost second nature, and you're going to kind of see it, because it was literally almost exactly what we were talking about in AM session in regards to the shorter range and then the bigger range, right? And the more extremities, and wanting to focus on those because we know those are going to be higher probability, right? And then Brendan, this one, you're absolutely right on this one. I was at the gym, like I said. I didn't not even see this wick because it was so damn big. But we did see a nice 12-minute fail to close. Price referred back to this point, the move origin of this area, gave a nice semi-inducement right here, basically just referring back to this area. But this definitely would have been a little bit of some funky business right here, because this is quite a massive wick. And I think that's probably, yeah, that was at right after 12, so at top of the hour. Usually there's some volatility injection every top of the hour, right? But in terms of that, yeah. You said because the wick didn't close above the high, 100%. And that's right. That's completely right on that. And I just didn't see that because I was looking on my phone. But other than that, like if we completely ignored that wick, this would be a really, really, really quality setup. You were speaking in riddles, and no, I was not. I was legit trying to be as clear as possible. Okay. Now, kind of moving on a little bit into the next setup. And I kind of want to talk about this too, because this is another perfect representation of what I talk about a lot. Now, first and foremost, I want to say that this setup right here can kind of be a little bit picking the top-ish, right? Obviously, we have a really good 12-minute POI, and I will say, kind of taking a step back right there. Actually, no, scratch that. I'll just keep talking about this specifically right here. I was going to kind of go on a little tangent, but there's no need. But right here, we see this beautiful, massive 12-minute CSS right up here. You can see green bar, black bar puts in that high, right? So that's going to be the sequence right there. Now, if we draw that out over here, now let me delete actually all of these real quick. Boom, 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 boom. Okay. If we delete those and kind of draw this over, right? Let me draw this over so that's not distracting. What do we see happen? And I hope you see it, because it's this black line right here. And this is what I talk about specifically, and I think I put a relatively big emphasis on it yesterday, was what price will do at certain points is it's going to come up and put some form of relative equal highs or engineer some form of high before hitting an actual like POI, right? And we know 50% of a specific area at a given time is always going to be something to definitely be and keep note of, right? We see this 50% of the CSS right up here, right? What does price do? We come up, we put this high, don't touch it, refer back, mitigate some areas down here, trade back up, fail to put in another high, right? Now, what do we have resting right here? Relative equal highs. Price gravitates back up, getting a actual mitigation at the 50% of this, then doing what? Price closes back within the range. You could take an entry right off the break of this, or if you want to wait for a CSS confirmation, you can, and you can take an entry off of this CSS right here. Either or. But that's the main importance, because I remember talking about that specifically a lot yesterday in regards to like price putting highs, lows near certain areas, and then making sure not to get trapped in those inducement points, right? Because if you look at it from this viewpoint, this is actually a perfect representation right here, this high right here. What do we see happen? Now, this is good for a quick scalp, but ultimately, if you're wanting to hold towards all of this trendline liquidity resting down here for a bigger move, what do you fail to recognize? What we did right here, price engineering these points, and it's going to want to push up one last time to that higher time frame POI to actually mitigate that area, because to me, like I've said multiple times, something to me is not really fully mitigated until at a minimum the 50% is met, right? And you can see this is specifically what price does here, and that is where the true bigger move ensues. We can base it off of that, and you can see what this immediately just gravitates towards, all that trend line liquidity right down here. Now, I think, where was this? Okay, we're getting near end of session right over here. These are just markups. I can delete that. Yes, it wasn't until we turned down there I stopped looking long. Oh, like right up here? Or were you talking about like over here on this sharper move? Okay, yeah, that's good. I believe that was something on the 72-minute too, if I remember correctly. Yeah. It was an unmitigated wick on the 72-minute. All right, getting back into this right here. I don't believe there was this. Oh yeah. This is a really good example. First and foremost, for Rico, and for people who are still trying to figure out like anchors that I anchor off of for the CSS projection right here. Let me drag this over right up here. CSS projection right here and right here. This green bar low, this black bar high, right up there. Since they're not color coded properly as a one candle, you got to include that second candle that puts in the high. And that's what that CSS projection is off of right there. And you can see what price does when we expand down to here, this -2, -2.5. We get a little retracement back up to this -1.5, -1, and then expand from there. Now, right here, what we see happen is price puts in, look on the left side of my chart, 12-minute fractal. Where is it within this -1, -1.5, which usually after, especially if we close a body out of the -2, -2.5, if the ultimate function or delivery that price is trying to do is going to happen, a lot of times you're going to get retracements to that -1.5 to -1, right? And we see this beautiful 12-minute fractal resting almost perfectly within this area, right? Price refers back up to this, gets a nice expansion off of, and there's two kind of points here that I want to make, because this is a perfect representation of what I was talking about in the morning session about large body candles. First, what do we see, right? So we get this confirmation displacement off of this fractal, right? So realistically, seeing this big long tail wick, it's an obvious point for price to gravitate towards. We can kind of anticipate any continuation move to kind of ensue down to those, right? What we see price do right here, we have this high, okay? We come up, we take it. But what do you notice about this specific candle specifically? Look how big this range is relative to its apparent candles on the left side. Much, much bigger, about 2 times the size of the previous ones. And that's something important to note, because you're going to run it into areas where that is going to be a big roadblock for you, and you're just going to take unnecessary drawdown, because if you look at this too, what do we have as well? Big long tail wick, small body. Usually not the most favorable points to engage in, right? And what we see price do is price refers back, takes this high right here, right? Takes this high, barely takes it, which is just fine. But note the size of this candle that closes back within the range compared to this candle. These are going to be your much higher probability setups right here, because you don't have, or you're not trying to attempt to get something much larger than what the true range is within this given time, right? And it's important to note that, because like I said, if it's too big, then immediately probabilities will drop tenfold, right? Obviously, you need a much larger move that compared to the relative range we're getting in previous candles, it's just not going to be there for you, right? And that's extremely, extremely, extremely important to note. And you could have, for this one, obviously, break of that candle. Where could you target? Where's low-hanging fruit? What do we have down here? Relative equal lows. We have that swing low right there. Quick targets. You could either trim there and go break even, or target down to that, right? And you can see price. Then we get in a little bit of a tighter range right here. Price then refers back up to this CSS right here and kind of expands down. And now this one right here specifically isn't a really a valid setup at all, but it's something to identify too, like I was talking about earlier about range bound stuff. When you're in tight areas, where you should be focusing on shorts and where you should be focusing on longs, because up here we're in a premium of range, which would be anticipating shorts, right? And then I think there was yes. These are the type of setups you want to see. Mind this. Right over here. See, let me delete this. Big 12-minute imbalance, right? We see price. This is after hours, by the way, but I'm just using this purely as an example because it's a really, really quality example. Right here, what we see price do is expansion, okay? V-shaped recovery, decent expansion up into this. So we should start anticipating some form of what? Consolidation, right? You can see we start to trade sideways right here. Sideways. This is a micro consolidation on some sort of lower time frame chart. You can spot it easily on the second charts, and you can easily spot it honestly on the 1 minute chart if you just know what you're looking for on a candle by candle basis. But in terms of this, obviously it's going to be after hours, but quality of a setup wise, this is really, really textbook because we see this really, really good reaction off of this 12-minute imbalance. Price trades down, chops a little, then we get some form of inducement as we are anticipating with chop, right? We're anticipating some form of inducement to occur, which is exactly what happens here. And you can see right down here, there's not much volume resting down here. We have this kind of internal low, which once this is closed below, that would be a good break-even point specifically for this. And you can start targeting down towards either this CSS or some of these fractals as targets right there, right? So I believe that was everything for today. Honestly, today was one of those days I was saying that as people were getting in here where it looks clean. I wouldn't even say really clean on the 12-minute, but the 1 minute, it was honestly just horrendous for sweeps today, which I'm glad I was off the charts relatively quick this morning and just got what I got in pre-market because this even just looking back over it was kind of a headache in itself. So if y'all have any questions, just let me know.